Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, February 14th, 2020, Valentine's Day, and also the final trading of the week, and we are now in the final trading hour of the day. I mention this each day, but in my opinion, the most valid prices to make your buying and selling decisions from are the prices as close as you can get them to the close of the market. During the day, you have the algorithms and the day traders battling it out. I consider it mostly noise. At the end of the day, in the last hour, and particularly in the last few minutes, the large financial institutions come in. They're the most well-equipped. They are the smartest. They have the most money that they're dealing with, and they take the prices, the control of the prices away from the day traders and the algorithms. And I like to ride on the coattails of the large financial institutions at the end of the day and follow them and make my buying and selling decisions from them the majority of the time. The last week or so, I have been doing a few day trades. I thought it would be helpful for the podcast to see how the approaches and the setups that I use on the daily charts, which I mainly trade, also work on intraday timeframes as well. So I'll have a few day trades to share with you today as well. So all right. Well, thank you all for coming. It's always nice to have everyone here. I appreciate you spending your time here, investing your time here. I hope it's helping you with your trading and investing. And I really look forward to seeing everyone every day. So thanks a lot. I appreciate it. Hey, Evan's here. Good to see you, Evan. Happy Friday to you. Hey, Kamal. Good to see you, my friend. Appreciate you being here. Christopher Hitchin. Hey, Christopher. Nice to see you. Hope you're having a nice evening in the UK. Bob is here. Hey, Bob, good to see you. Thank you for coming. Dan is also here. Hey, Dan, nice to have you here. And Zach. Hello, my friend Zach. How you doing? Nice to have you here. All right. So, well, happy Valentine's Day to everyone. Hope you're having a good Valentine's Day, whatever that means, or whatever plans you have this evening. So currently, we've kind of had a wild one. The Dow was up, then we were down triple digits. We're not down triple digits now. We're only down 89 points. NASDAQ is almost even, not even up quite a point, and the S&P is down 1.5 points. So definitely the Dow is taking the worst of it today. NASDAQ is getting the best of it today. So, all right. Well, listen, here is the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them. More importantly, how I'm going to manage them moving forward. After that, we're going to spend some time on trader psychology. Very important part of trading, in my opinion, the most important skill that you can develop and hone. It's important to be able to read charts, read support, resistance levels, know how to enter and exit. But at the end of the day, if you create yourself a nice plan with all the information you have about trading, but you don't follow it, you're kind of shooting yourself in the foot, right? It's not very helpful. I mean, why even make the plan if you're not going to follow it? So that all circles back to trader psychology and discipline. So we're going to talk about that. Then we're going to go through my watch list, each stock one by one. I have 3 requirements when I'm looking to enter a trade. One, I want to make sure that I look for a combination or a confluence of indicators lining up on the same time frame and on multiple time frames if possible. I look at each indicator as a group of buyers, and you can dramatically increase the profitabilities, chances of your trade if you can get in with as many other people who are buying at the same time as you are. So if I look at each indicator as a group of buyers, so if I have 2 or 3 or 4 indicators lining up at the same time, I look at that as 2 or 3 or 4 different groups of buyers. And the more buyers, the better. So that's requirement number 1. Number 2, make sure you have a good risk to reward ratio. I prefer to have at least a 2-to-1 risk to reward. So if I'm risking $100, I should be able to make $200 if I'm right, or more, based upon some valid and realistic resistance above me compared to the support below me. And then third, just make sure you do not have too many correlated positions. If you have a bunch of tech stocks and the market goes roaring up, well, you're doing really well. But of course, if the market goes the other way, then you get hit 2 or 3 or 4 times harder than you would if you would have just had one tech stock. So it's always important to not be too heavily correlated, different industries, and if you can, if it's available, some type of other type of security like oil or gold or bonds that move independent of the market. So those are my 3 requirements. We're going to go through. If I find something at the end of the day that looks good, I will go ahead, enter it at the end of the day when the market closes. If anybody has any questions for me, please let me know. If you have any comments, please put them in the chat. If you'd like me to take a look at some stock symbols today, if you'd like me to break those down, I'm happy to do that after the market closes. If there's a stock symbol that you think looks interesting and would be helpful for the group, please go ahead, put it in the chat before the market closes, but please put an asterisk by it or a star or something so that I know it's time sensitive and I can do my best to get to it before the close of the market. All right, so that is the plan. So everybody hang tight. I'm going to run the U.S. legal disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay. All right. Joe Turner's here. Hey, you doing? Hey, Han Solo is back. Good to see you, Han Solo. Hope you've been having a good trip and being safe out there, and nice to have you here. Zach said, still riding EBR. I think it was being hit 2 profit targets and phased a little. That's great. Yeah, we're going to go through all the positions that you have that we have up on the board. Hello, Simon James. Nice to see you, Simon. Appreciate you coming. M.L. Kahari. Hello, I am Mohammed from Egypt. I watch you every day from the last month, but always offline. Well, thank you very much. I appreciate it, Mohammed. Appreciate you coming by. And if you have any questions, anything I can help you with, sir, you let me know. Frank says, hey, we got a poem. Peace and love, a poem. Don't trade with your heart. It's just not smart. No Cupid with his arrow aimed from above can change the fact a stock offers unrequited love. Very nice. Very nice and apropos for Valentine's Day. Peace and love, a poem. Don't trade with your heart. It's just not smart. No Cupid with his arrow aimed from above can change the fact that a stock offers unrequited love. Very nice, Frank. And if you don't mind, I will post that on Twitter because people really seem to like those poems as well as I do. And I think everyone else here appreciates them. Muhammad says, I don't know. Am I chatting private or public? So in case it is public, hi guys. Yes, it is public. It is public. So Muhammad says hello. Frank says correct. Your heart. Correction, your heart. Oh, your heart here. Yes, don't trade with your heart, not you are heart. Gotcha. I will make that change. Simon, could you please explain V1 to the downside from how today's high, low, close relates to previous high? Yes, Simon, I do have a video. I have a link in the description of this video down below. And I do have a lesson. It's a free lesson. It's on YouTube about V1s and V2s. It's about an hour and it's pretty comprehensive. So yes, I will, when I find a V1 or a V2 here to the downside, I will show you. Well, tell you what, I've got one right here. See here on IWM, here is day 1. Day 2 washes out or goes above. When we're talking about a negative V1, it washes out to the upside. So here's day 1. Day 2 goes above day 1's high, and then day 3 closes below day 1's close. So here's the high, Next day it goes higher than the high. Today it looks like it's going to close below day one's high. So that is a V2 to the downside. Here is a V1. Here is day one. Day two washes out day one and then closes below day one's close. So this is a V1 when it happens in one bar, goes above the previous day's bar and closes below. That's a V1. This is a V2 where you have day one. Day two washes out day one's high, but doesn't close below. But the next day does close below day one's close. So here's the high, goes higher, closes below day one's close. This is a V1 to the downside. Here's a V2 where you have a high, you go higher, but don't go close below on that same day. And the next day you close below the close. So that is a V1 here. This is a V2 here. But like I said, in the description of this video, I do have a totally free lesson on YouTube. All my lessons are free on there. But just look for the title V1, V2 entries. And it's about an hour's worth of specifically talking about V1s, V2s. Hey, Steve Burns is here. Good to see you, my friend. Always an honor and a privilege to have you in here, Steve. Thank you so much. It's very nice of you. Appreciate it. And I'm always excited to have you here, and I know everyone else is. And happy Valentine's to you and Holly. Steve says, this is a great Valentine's trading promo, Frank. It is. Han Solo says, Greg, very cool. Your audience position board is rocking. Yours too. Thank you. Joe said, hey, we have a poem from Joe. Poem, you watch the candles as they go up and down, and you hope that soon they will turn around. But like spices in a dish, they always will blend, and you hope you're on top before the weekend. Awesome. Just so good. I'm so impressed that both you and Frank can just spit out these poems. I mean, and spot on. Not only being able to rhyme stuff, but just spot on. Simon says, does it matter about how low the washout, about the low of the washout day or day three? Well, the rule, Simon, whether it's a V1 to the downside or to the upside, this one's to the upside. It has to go higher than day one by at least a quarter ATR. Here's my ATR channels from here to here, from here to here to here. This distance is one ATR. It needs to wash it out by at least a quarter of an ATR. So about this distance, which is pretty close here. This one definitely wash it out. Same to the downside, right? It has to, if it's a V2 to the upside or a V1 to the upside, you have to wash it out by at least a quarter ATR. Hey, gamer, what's going on? Good to see you. Frank says, I was just there on my STC stock. Got out in time. Oh, very nice. Evan says, IRBT. Well, let's take a look. Yeah, it's pretty good. It's pretty good, Evan. We're above the 1 ATR channel. We come back into the value zone. We go down, but then we hold for a couple days. And here, Simon, is a V2. Here is day one. Day two washes out day one. Day three looks like it's going to close above day one's close. So we went up. See the big volume up? See the volume down has reduced. This is good. It doesn't show distribution. It just shows people taking some profits. So I do like that quite a bit. Jackson is here. Good to see you. And by the way, Steve, thank you so much for including me on your Twitter list today. Always appreciate that. It's always nice. All right, well, let's get to it. We've got a lot of things to cover today. And I will try to answer as many questions as I can at the end of the day. IWM. Okay, we did buy IWM back here, or I bought IWM back here on the 11th of February when we had a 1050 SMA cross. This is a good back-tested approach. It does test positive over the long term. when you have the 5 SMA closing over the 50 SMA. We bought it here at 166.88. Next day it moved up nicely, hit one profit target. Yesterday it moved up again, but did not hit a profit target. Today we've had a little bit of a pullback. I will keep this stock. This trade is more of a robot trade where I will keep this trade as long as the price stays above both the 10 and the 50. If it came down tomorrow or Monday and closed below both the 5 and both the 10 and the 50, I would go ahead and get out. That's the way that I approach these crossovers. Other people just wait for the 10 to actually cross under, but I'm always looking at risk. I'm always concerned about risk, and I have found this particular way always sides more with conserving of capital. So as long as the price stays above the 10 and the 50, I will stay in. I am targeting the 70 RSI as my profit target up here. I am phasing out. If we had a big, huge reversal bar, huge V1, high volume, that also may be a reason for me and a red flag to get out. But anyway, so far so good. Is down today, but we are up on the trade. Okay, everybody, world famous overnight SPY trade. In case we have some new viewers, I want to go over this quickly. I do buy the SPY each day at the end of the day, every day, and I sell it first thing the next morning. I do this based upon a study, a long-term backtest study from Liz Ann Saunders at Bespoke Invest on Twitter. She is the chief investment officer at Charles Schwab. But this backtest is done from 1993. They tested two options. First option, buying the SPY at the open each day, selling it at the close the same day. So buy the open, sell the close, buy the open, sell the close. If you would have used this approach every day since 1993, you'd have returned a negative 13.9% return for all your troubles and all your work. However, if you do the opposite, which is what I do, I buy the SPY each day at the close, sell it first thing the next morning. So basically, I just hold it overnight. But if you would have used this approach every day since 1993, you'd have returned a positive 634.2% return. Past performance is no guarantee of future results. That is true with any trading approach, but if I'm going to allocate capital towards something, I'm going to allocate it towards something that has a good back-tested record. The blue is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. There's a clear difference. I definitely do not want to allocate money towards this. I would rather allocate it towards this. If you have an edge in the long run and you can stay in the game, you can see what your equity curve can do. There are ups and downs. These are to be expected. Doesn't mean there's anything wrong with the approach. It just means that these things happen. But in the long run, if you have an edge, it will play out over time. Important part, though, is to position size correctly, not to get too large on your position size, because you may run into a bad streak and then just give up on it altogether. So that being said, I did buy the SPY at yesterday at the close, 337.06. Sold it this morning, 337.48. So 42 cents overnight, better than nothing. Happy with the gain. It's been a good year so far. Started out a little shaky in January, but it's been doing really well in February, and another small gain here today, and we are definitely lower than the open. So I will be buying this again at the end of the day, holding it over the weekend. AT&T. I did buy AT&T yesterday here at on the 13th of February. Higher low V1. And Simon, if you're watching, we closed below the 1 ATR channel. We came back into the value zone. We pulled back for a couple days, and here's our V1. Here's day 1. Here is day 2 that washes out day 1 by more than a quarter ATR, or at least a quarter ATR, and then closed above day 1's close. Right? That is a completely valid V1. It also rejected the 5 and the 10 and the 50 and the 20, which is also positive because now we have that as support to the downside. Was up slightly at the earlier part of the day. Now we have pulled back. It's only down 7 cents. I will keep this as long as it holds these bands here, this entire band of moving averages underneath it, which also dovetails nicely with the halfway of the washout bar. So basically, if we close below halfway of this bar, which will also close below the moving average channels, I would get out for a small loss. My profit target up here is the 70 RSI. So you can see, from here to here is our risk if we're wrong. From here up to here is our potential reward if we're right. So it gives a good risk to reward ratio, which is always important. Okay, UNH. So I did buy UNH here. Same thing, Simon. Here's a V2. We closed below the 1 ATR channel. We came up into the value zone. We pulled back for at least a couple days. Here's a V2. Here's day 1. Here's day 2. Here's day 3. Day 2 washes out day 1 or goes below day 1 by at least a quarter ATR. And then a few days ago when we bought it, it closed above day 1's close. Had a huge day the next day, scaled out of about 4 profit targets. It has moved more than 1 ATR away from my entry. At that point, I institute a trailing stop. Looks like today, very likely we're going to close under the close of yesterday. So that will be my signal to get out. I actually sold half of my position yesterday. That's why I have a little notation here of 1/2. And the reason why is because we challenged this previous high here and failed. So, sometimes when I'm torn in a position, like it's still going up, but it rejected a previous range or high or anything like that, I like to take off half. I feel like you never can go, if you're really struggling, taking off half I think is a good idea, because if you're long and you take off half and it goes up, you're still happy that you have half. If you're long and you take off half and it goes down, you're happy that you sold half, right? So am I happy that I sold half yesterday, 1.36 higher? I certainly am. See? So it does work from a psychological standpoint, but it has moved more than 1 ATR away from my entry. If it closes below yesterday's low, I will go ahead and get out and just lock in the profits on that trade. But that's a good trade, and Kamal and Bob are also in this trade. Okay, so those are our four trades, for the normal trades. The crossover on IWM is profitable still. SPY, we had a profitable trade, which is good. AT&T, we are down slightly, and then UNH down, but nice profitable trade as well. So let me go into the dreaded day trades. Oh, this channel's turning me into a day trader. What is happening? It's okay. It's all right. I've actually had some really good trades. So, okay. Goldman Sachs on the 5-minute chart. We have a low with deep red bars. We go back up into the value zone. We come back down. We test that low. Even though we're just as low as here, you see how there's no red bars? This is what's called a double bottom with a bullish divergence and a missing right shoulder. So then we had a V1 trigger. Here's day 1, here's day 2. Day 2 washes out day 1, closes above day 1's close, right? So I have a low with deep red bars, rally, back down, test this previous low, although there's no green bars. MACD is still under a bullish crossover, and the trigger for the trade was the V1. Okay, so it took right off like a champion. Immediately I hit 1, 2, 3, 4, 5, 6, 7, 8 profit targets. I got out of about 80% of the trade on this way up. It moved more than 1 ATR for my entry, and then boom, the big crash down here, closed below the previous day's low. So I got out of the remaining 20%. But nice trade, right? This is a great example of a combination of indicators lining up. Low, rally, lower low, deep MACD, no deep negative MACD, no negative MACD, V1 trigger inside the value zone, and it just took right on up, scaled. This is really why I like to scale, because I was scaling into strength, and then when it came back down here, I didn't have that many shares left. So that was a nice trade. I did have another trade here. We went under 30, over 30, under the negative third ATR channel, over the negative third ATR channel. On this one, I decided, you know what? I'm not going to scale. I'm going to show everyone in the group, kind of two approaches, scaling and not scaling. Well, I wish I would have scaled, obviously, right? Because I would have hit at least 3 or 4 profit targets on the way up here, but I didn't. I was kind of lazy. I just sat here and watched it. It moved more than 1 ATR for my entry and then came back down. And I did have a loss from 236.47 to 236.27. So I lost 20 cents, had to get out because of my rules, and then it took off without me. But that's okay. That's okay. So, and then Apple. I also had a trade on Apple. And I also did not scale out on this trade, just to give an example. But we came down, we bounced off the 250-day, closed back above. I didn't take it then. It came back down, went under the 250, closed back above. That's when I decided to take it, and it moved right on up immediately. Boom, boom, boom. I didn't get out here because it hadn't tested the 50 RSI yet. It was still above, have not rejected the 50-day moving average. Then it went up some more, boom, and I had to get out here because it went above the 50 RSI and above the 50-day moving average and closed back down. But it was still a nice profitable trade, 324.19 up here to 324.51. So 2 out of 3 on the day trades, and was profitable. So anyway, hope that helps. Hope that shows you a little different approach. You can see what we have going right here. We closed below the negative 1 ATR channel. We rallied into the value zone. Have we had a couple days down? Yes, we have. Here is day 1. Here is day 2. If this bar closes above day 1, we will have, here, let me get rid of all these lines. This would be a valid higher low V2. And I'm not going to trade this, but we'll paper trade it because I have too many things to do than to watch it. Right here, it triggered. You could take it right when it triggered, or if you wanted more confirmation, you could just wait for this bar to close and then make your decision based upon that. So let's just say we went ahead and entered this right here, but this is a higher low V2. It did trigger. It's under the trigger now, but if I bought it right when it happened, I would have to wait until the bar closes. And if it closed untriggered, I would have to get out. Okay, so we'll watch that. Now, let's take a look at everyone else's trades here. No one had Roku, but I did want to just point out that they had great earnings, but again, it did gap up. I remember we spoke about this in the after hours yesterday. But you never know what's going to happen. They had a great earnings, and then look at this. That's a V1, by the way. Day 1, day 2, washes out day 1's high, and definitely looks like it's going to close below day 1's close. So that would also be a V1 to the downside. Okay. Malik and Kamal, great trade here on match. I like this setup here. We had a V1. Here's day 1, day 2. Day 2 washes out day 1, closes above day 1's close. Also went below the 200, over the 200, under the negative third ATR channel, over the third ATR channel, and it has moved up nicely. It's up 1.85% today, which is pretty good on a down day like this for sure. So congratulations, Malik and Kamal. If I were in this trade, I would be looking for a rejection of the 50 RSI. And this is somewhat interesting trade for me here as well. We have the green triangle. Here's day 1. Day 2 went above day 1, then closed underneath. It basically did a V1 to the downside. But today it took off again, reversed that negative pattern, and went up this way. So that is quite impressive. And it has tested the third ATR channel, the 200-day moving average 1, 2, 3 times. So I'm going to look at that one at the end of the day. Malik also bought IAC back on the 12th. Nice V1, rejection of the 200-day, rejection of the 100-day. Up so far on that as well. Good relative strength. Let's see. Murat has Nokia. He's had a really nice trade on this. It's been a little bit longer term trade. Bought it back here. 395, I think, somewhere in there. Moved up nicely, went against him, but then really shot up after earnings. It's pulled back a little bit from earnings so far. Bing He up today on KL. He bought the under 30, over 30, under the third ATR channel, over the third ATR channel. Just kind of moved sideways for a couple days, but today it has moved up nicely. So congratulations, Bing He. Gamer had a nice higher low V1. Here's day one, day two washes out day one, moved up nicely, held above the 50 RSI, held above the 50-day moving average. If I was in this trade, I would probably get out with a close under the 50. Simon, this is a V1 to the downside. Here's the high of yesterday. Today we went higher and closed lower, but see, we didn't really go above by a quarter ATR. So I wouldn't consider this a valid V1. But as far as gamer goes, it is closing below the 50, which is not such a great sign. Evan bought the under 30, over 30, under the third ATR channel, over the third ATR channel, V2, day one, day two, day three. Day two washes out day one, close above day one's close. Kind of moved sideways so far, but it looks like you are up on it. Bing He, fantastic trade here at 806. Now we're at 838, up 3.84%. So congratulations, Bing He. Very, very nice. Take a look and see how it reacts around the 50-day moving average. Okay, so listen, this is the time of the day where I do like to talk about trader psychology. There's some really good Facebook channels out there, Twitter channels, post some really good information. This is actually from Facebook. Tani Stark is in the New Traders, Rich Traders group on Facebook. Really great group, by the way. If you're on Facebook, you should check that out. I'm in there, Steve's in there, Tom Bassel's in there, Tani's in there. Really good stuff, really good stuff. So this is, I believe, Mark Minervini's book. I'm just going to read this real quick, okay? Bear with me because I think it's important. A win-win solution to protect your psyche. As I've already pointed out, a trader's mindset fluctuates mainly between two emotions, indecisiveness and regret. And a trader's emotional state vacillates between greed and fear, and mostly fear. As we've touched on previously, there is the fear of missing out, which leads traders to chase a stock that's already had a big run-up price, right? FOMO. They try to squeeze every dime out of a trade because they're afraid of selling too soon, fearing that a stock they sell at 20 will become the next Google, or a stock that they bought at 45 drops to 40 and then to 35, which leads to regret for not selling at 40. So they hang on, hoping the stock will recover some of its lost ground. Compounding this problem, most traders sell too soon and take small profits because they fear the stock is going to erase the gains, but they hold losses because they fear they might sell the stock and it will turn around and go up, right? The only antidote to combat anxiety and calm fears are rules and realistic goals. With steadfast rules, your decisions will not be emotionally based, but grounded in reality. Remember, trading is not about buying at the absolute low and selling at the all-time high. It's about buying lower than you sell, making profits that are larger than your losses, and doing it over and over again. When you fully grasp this foundational aspect of trading, you will remove a big psychological barrier to successful investing. So, the takeaway here is, and I mentioned this many times, when you have a profit, don't worry about the fear of losing the profit. Be hopeful when you have a profit. When you are in a loss, do not be hopeful it's going to come back. Be fearful, right? Most people do the opposite. They're fearful when they have a gain. They're hopeful when they have a loss. Be hopeful when you have a gain. Be fearful when you have a loss. And, like Mark Minervini says here, you're not going to buy the bottom and sell the top. It just doesn't happen. I mean, maybe it happens every once in a while, but most of the time, as many of you who've been trading for a while know, it's very difficult, right? Take the emotional stress away. Just have a plan, follow the plan, realize you're not going to get the top, realize you're not going to get the bottom, right? Just have a plan, take a chunk extract some profits out of the market based upon what your rules say. And if it keeps going up, that's fine. Doesn't matter. You know, you're going to have another trade that comes around. But anyway, I thought this was a really great page here, and I'm not sure Know the Truth About Your Trading. I don't know if that's the name of the book or the chapter, but thank you, Tawny Stark, and thank you, Mark Minervini. That's a wonderful, just a lot of wisdom in here. Okay. Ooh. Yeah, I like iRobot. I like how we close above, we come back in, we move sideways. Now we have a nice valid V2. MACD is positive. It's pretty good. Let's look at the weekly. Yeah, I don't see anything really on the weekly, but when I look at the weekly, I just want to make sure I don't want to see something I really hate, like it's up at the third ATR channel. I don't care how good it looks on the daily. If it's at the third ATR channel on the weekly, I'm not going to take it. Joe says, my greed has got me stuck in SPY at 337.02. Didn't take profits when I could have. Well, you're in the profits a little bit, looks like. When did you get in and why did you get in? What was your plan, Joe? Han Solo says, Greg, do you think IRBT has overhead resistance at halfway of the recent huge bar? Are you talking about this big bar here, Han Solo? Or are you talking about these two down days? If you have a big up bar, I'm not concerned about the halfway. If you have a big down bar and you're coming back up into the halfway of the big down bar, then I'm concerned. But I'm less concerned when you have a big up bar and then come back up to the halfway of the up bar. I think, the only thing that concerns me here is this is about the maximum that I would want to take in the value zone. Here's the negative one, here's the positive one. 3/4, as you guys know, is about the maximum because you are going to start getting resistance here, here, and here. But, as far as the stop's concerned, your stop would be halfway of the washout bar right about here. So from here to here is your risk, and from here up to wherever is your gain. So I think it does offer a good risk to reward. Malik, hi Greg, I'm out of Mitch and IAC. I sold them on today's morning spikes. I would have loved to see bigger spikes, but got to take what the market gives. Okay, so Malik is out of MTCH, and he is also out of IAC. Well, good. I mean, that's impressive on a day like today, Malik, when the market's down. All right, we'll get rid of Roku just to show you never know what's going to happen with earnings. Boy, is that nasty. Can you imagine buying that at the open? Another reason to wait for the end of the day. Bob's out of UNH. I think we're all going to be out of UNH today. Mount Solo says, Greg, you must have blazing fast fingers to enter all your profit targets that quickly for day trading 5-minute chart. Well, yeah, I guess so. The first trade on Goldman Sachs wore me out. That's why I switched over to like one entry, one exit, because you're right. Hey, Marco, nice to see you, my friend. Always nice to have you here. Hope you're having a nice evening in Slovenia. Claudia says, hey, Greg and all, wanted to share with you my new issue. I'm being very disciplined, so no problem in that area anymore, but I am not letting my winners run. I am getting out too soon. Yeah, that's the other side of the coin, Claudia. That's what makes trading so tough. But you have been disciplined on the downside. That's way more important, right? I mean, you do have to let your profits run, but you just have to have a plan for them. That's all, Claudia. You have to have, do you have a plan on the upside? Because if you don't have a plan, you're not going to be disciplined, and you're going to get out whenever you look at your profit and loss and you're like, hey, that looks like a nice trade. I'll take that money. But just as important as getting out to the downside, you do have to let things run to the upside. But, if I had to pick between getting out too soon or letting your losses run, I would get out too soon. But that's something you need to work on. You just need to formulate a plan, just like I read in that book, right? So you're not getting out too soon. Let the signals tell you to get out, not just you. Spice went towards the moon today. What a move after I got out with a nice gain. Is it up again? This should be illegal. Oh my gosh. So Steve had a fantastic trade on Spice. He got in here, I believe, and out here. He had a huge gain. I'm just roughing it here, about 12%, Steve. I think that sounds right. And then it took off again and up again today. But listen, that's how it goes, right? You know, just like I read in that Mark Minervini book, Steve had a plan. He got in a plan. His signal told him to get out. Was it the top? Well, obviously it wasn't, but I'm sure he's still happy. But you can't, you know, be a backseat driver and go, oh, why did I get out? You got out. If you had a plan, you got out because you were told to, your plan said to, and that's that. Joe said, I bought SPY at yesterday's close, failed to sell at today's open. Oh. Glenn says, hey, Greg, like the look of real estate. What ticker do you use? I use XLE. Oh, no. XLRE. Look at this. Monster. A couple days ago, we had a double top with the bearish divergence, but now we don't have the divergence anymore because it's kept going up and the MACD bars have kept going up. Very, very strong. Just too high for me to buy up there. Bing He says, Greg, day trade has absolute smaller profits than your regular trade. Oh, yeah, a ton. Like Steve Burns says, you know, you day trade, overnight trading, you get the easy dollars. Intraday trading, day trading, you get the hard pennies. Yeah, and I'm battling for 20 cents, 30 cents, 40 cents. But again, part of the reason I'm doing it just to show you that, you know, these setups work on different time frames. Holy smokes, look at Slack. Unbelievable. Steve says Space was 14.15 gain. Yeah, of course he was happy, right? 100%. You're never going to get the top. Claudia says, I have the plan, but start seeing red, freak out and get out to then see this stock run without me. Yeah, it happens to us all, Claudia, for sure. But again, if you have a plan, you stick with the plan. Just let the plan dictate, not your emotions, you know. And if you need some help putting together a plan, you know, just let me know. I mean, we could put together a pretty simple one for you. It doesn't have to be like the most, you know, brilliant plan in the world. Honestly, this, in my opinion, the simpler the better. Okay, boy, we're running behind. I'm going to have to really jet through these symbols today. Apple, nothing there. I need to pull back into value. Adobe, need to pull back into value. Amazon down today. It's too extended. Need to pull back into value. Boeing down today. Did have resistance up there at the 200. Want to see it pull back into the value zone. Berkshire Hathaway up today. Here's a V1, day one, day two. Day two washes out day one, closes above day one's close, and rejects the 50-day moving average, which is good. But, yeah, we make a higher high here, come down, we make a lower high. We haven't washed out that low. I would pass. Beyond Meat, we have a V2. Here's day one, day two, day three. Day two washes out day one, day three, closes above day one's close. But we came into the value zone. We bounced up. We made a lower high. We have not washed out the previous low, so I would pass on this as well. Caterpillar, back in the value zone, like to have a couple days down and a V1 or a V2 back up, buying that higher low V1. So nothing today, but possibly setting up in the future. Dow, need to pull back into the value zone. Walt Disney, we have this nice sideways movement looking for a V1 or a V2. We could have a great V2 on Monday. Here's day one, day two washes out day one. If it closed above day one's close, so nothing there. Etsy, very strong, too high though, need a pullback. Facebook moved up a little today. Oh, snap, I forgot. I totally forgot about this. This is legitimate signal right here, everyone. This is Facebook. This is the 10, 1050 SMA crossover. This is as valid as it gets. All right, I may actually have a trade for today. Okay, so yes, I will definitely be taking this, the 1050 cross under, cross back over, happens in a decent place here in the value zone. So I definitely will be buying Facebook at the end of the day based on that crossover. Gold up strong today, nothing there. Google, need a pullback. Goldman Sachs, we had the day trades on that. Nothing there. How are we doing on time? Home Depot, very strong. Need that pullback first. Intel, need the pullback into the value zone. Russell, we have coming off of its lows. That's good. We have that with the 1050 SMA crossover as well. Johnson & Johnson, been waiting for that baby to come back in. Had a lot of bearish divergences. It's finally here, but we're down, we're down, we're down. Need a day or two sideways, then I would look for a V1 or a V2 to get me by that dip. CarMax, nothing. Coca-Cola, need a pullback, right? We need a dip. It's just too strong to buy there, or too high to buy there. Lockheed Martin, pull back into value is what I'm looking for. How am I doing on time? MasterCard, very strong. Need a pullback. Do not want to buy up here. McDonald's, pullback. Merck. Yeah. I don't know. I'm going to let that one go. I think there's better. Microsoft up a little bit today. I'd like to look for a pullback into the value zone here. Netflix, pull back into the value zone. Nike, need a pullback into the value zone. Philip Morris, super strong. Nothing here. We need to pull back into the value zone. I know I'm rushing through these guys. I'm sorry, but I'm running out of time. Qs up slightly today, still above the 70 RSI. Silver, looking for the 5 EMA to cross over the 20, looking for that crossover to buy. So nothing to buy here yet. SPY, going to buy that at the end of the day. Bonds, pull back into the value zone. Tesla, down a little bit today. Just waiting to buy that dip on Tesla. Twitter, holding above the 200. UAL, okay, so I might have a nice higher low V2 on Monday. We're back in the value zone, down, down. If we could wash that out, close back over with a higher low V1 or a V2 with the MACD being positive, that would be good. Very similar to UNH. Natural gas holding steady. Did take this trade here, move sideways, hit a couple profit targets, and then this one really hit me. I actually hit a maximum stop on this, an emergency stop. UNH does look like it's going to close below the previous day's low, so I will have to get out. Oil, a little bit of a rally off the bottom, but I would rather have this come into the value zone like it is and then pull back for a couple days and buy that higher low V1 or V2 with the MACD positive. VIX was up earlier, now down. Verizon, nothing there. Walmart, there's a V1 to the downside. Simon, here's day one. Day two goes above day one's high, and it looks like it's going to close below day one's close. So is it a V1 to the downside? It is, but it's not a valid one because the day one bar is larger than one ATR. So, you know, there's a lot of nuances and a lot of rules with these V1s, V2s. Energy, we moved our way into the value zone. We've had a down day. We had another down day. If we could reverse with a V1 or a V2 into the value zone on Monday, I would take that. Financials, nothing there. Real estate, very strong. Holy smokes. Utilities. Well, people did buy that first dip, but now we're back. Look at this. Here's a high. See how high the bars are? We pulled back. Red bars. Now we're higher. No green bars whatsoever. This is a massive double top with a bearish divergence. It looks very positive, right? And it doesn't mean jump in here and short this, but the setup, the big picture, the context of this chart is we have a high with very high MACD bars, meaning high momentum, we pull back. Red bars, now we are higher with no green bars. This is called a double top with the bearish divergence, missing right shoulder, and we are right up against the third ATR channel as well. 90% of prices fail up here, so this looks very bearish to me. And XLV, nothing there. Okay, so looks like to me Facebook and the SPY are the only thing that I'm going to buy today. We do have the 1050 crossover on Facebook, back tests well, and then of course the SPY. Now let me look. All right, let's get rid of Apple because that was our little day trade. And I'll tell you what, the day trading I've been doing lately kind of stresses me out. I forgot how stressful it is. I mean, I'm glad I made money at it. You know, I mean, I think I've had 6 trades. I've only had 1 losing trade. So it's been good, you know, but making 100 here or 200 here or 300 here, I mean, I'm very happy for it, obviously, but it just changes up my day and I'm more tired at the end of the day. That's one of the reasons. But again, you know, I think it does show you in the group here how it works on different time frames. All right, Goldman Sachs, why do I even have this here? UNH, going to be getting out of this. All right, so it looks like Facebook. Okay, looks like Facebook is what's going to be happening today. Facebook and the SPY and getting out of UNH. Now, sorry, I've been running out of time here. Yeah, work, Steve, was massive. Bing, he says, Greg, day trade has absolute smaller profits. Yo, I already read that. Yes, you're right. Claudia says, I have the plan, but start seeing red, freak out, and get out to then see the stock run without me. Okay, well, we need to work on that somehow, Claudia. Right? You need to sit on your hands or lock your computer up till the end of the day, right? Frank says, Joe, you're trading SPY exactly the same as my brother Phil, even the gain. Steve said 14.15% gain. I was happy, of course. Sampors is here. Hey, good to see you, Sampor. Haven't seen you for a while. Appreciate you coming back. He says, hi, Greg. Claudia says, thank you, Greg. Let me help, Claudia. I understand this issue. You know, I want to help you if I can. We've worked on the letting the losses run. It seems like that's worked. So let's just fine tune the other. Sampor says, what about GWPH? GWPH. V1, but it's way too high for me, Sampors. I mean, we moved up high. I want it to come back in the value zone. Anything above this 1 ATR channel, I consider overvalued, extended. It doesn't mean this can't go up. I mean, of course it can, and you know, it's strong. But again, my rules, my filters tell me if I'm going to buy a dip, I want to buy a dip back in the value zone, or back towards the back, you know, a mean reversion trade back towards the mean. That's what's happening when you have a pullback into value zone. It's a mean reversion trade. But it is the V1. It definitely is a V1. What about FANG? I really don't see anything here, Sampors. I mean, we have a low, we rally, we make a lower low. We've come back. If I were looking for something on FANG, I would either need a under 30, over 30, or a move into the value zone with a couple days down and then a higher low V1 too. Although you do have earnings coming up, but I don't see anything here on FANG. Markets are closed on Monday. Is this true? I assume it's true if Glenn says. I didn't know it was closed. Okay, so I guess Tuesday. Can somebody confirm that? Oh, it's President's Day, huh? Okay, so markets are closed then, right? Good to know. Thank you so much for telling me that. MMM. Don't see anything here on MMM on 3M. I mean, we're not low enough to buy the dip, and we're not back in the value zone. Yeah, I do like iRobot. Claudia says, you help me a lot by seeing you execute your trades and to hear how silly my issue sounds by you reading out loud. They're not silly, Claudia. All traders struggle with this. All traders struggle with these things. No, Merck does not have a V2. Kamal, I mean, here's day one, here's day two. Day two washes out day one, but day three, which is today, has not closed above day one's close. It's gone under 30 over 30, under the negative third channel, over the third HER channel, but not a V2. All right, I've got 3 minutes here, so I am going to go ahead by Facebook with the crossover. Gonna get out of UNH. And then buy the SPY. Apple actually went positive on the day. AT&T might go positive on the day. That would be awesome. All right, let's see how we close here. Oh, Apple might close red. Oh, AT&T looks like it's going to close red. Shoot, so close, so close. All right, we've got about 30 seconds. I already did by Facebook. Oh, Beyond Meat. Yeah, it's a V2. I'm on solo, but we have a lower high. We came back into the value zone. Our high here is lower than here. If I get a lower high, I need to wash out that previous low. But it is a V2. I mean, it's above 50. All right, so Monday the market is closed. Interesting, interesting. So where did we end up? Dow down 27, NASDAQ up 19, S&P up 6. All right, so let's take a look here. I did buy the SPY at 337.60 and Facebook at 214.12. All right. UNH locked in profits on that. See you, UNH. Thank you. That was a nice trade. And then Facebook. So Facebook let me put it over here on my Facebook chart. All right. 214.12. Okay. Closes under both the 10 and the 50, I get out. If it moves up, I scale. If it rejects the 50 RSI or the 70 RSI, I get out. So we got that at 214.12, and it's at 214.18. Wait, is that right? Yeah, 214.12. Let me make sure. 214.12. Yeah. Okay, good. So we're up on it. And then SPY. Oops. Move that over here. Little profit on that one today. New entry 337.60, right where it's at. Okay. So here's the roundup. 1050 SMA crossover on Facebook. Entered that today. IWM. The 1050 cross also back on the 11th. Of course, we have our overnight SPY trade, which we take every day, and then AT&T was down a little bit today after that higher low V1 that we took yesterday. So it did have yesterday's high here. Today went higher than yesterday's high and reversed back down, creating a V1 to the downside, which is negative. That's why it painted this bar here. If Monday or Tuesday we can go up, take out the high of this bar, then we'll have a fake out where we go high, higher, lower, and higher again. That would be a good sign. So that's it. Facebook, Russell 2000, overnight SPY trade, and AT&T. That's that. Kamal says Merck was under over 250. Yes, it was, but it closed under. Well, let's take a look, Kamal, and take a look here at ETF replay. Let's put Merck in and see if that is a valid signal, long-term signal of the 250. I don't know if it is or not. Let's see how it backtests. Backtests pretty well. Beats buy and hold. So that's good to know. You know, come Tuesday, if it closes back over the 250, that might be a valid entry. Bob says, what was the cross on Facebook? So the cross on Facebook is the 10 SMA closing under the 50 SMA and then closing back over. Okie dokie. I'm kind of excited that Monday's a holiday. I did not even cross my mind, so thank you for letting me know. Kamal says the winning versus loss is terrible. Well, yes, that is true. I mean, look, it only wins 17.8% of the time, but it has about a 5-to-1 risk to reward. Keep in mind that having a bad winning percentage doesn't mean it's a bad trade. It's just a different way to approach it. It means that you're going to lose many, many times small to have a huge, huge win. If somebody has a 90% winning percentage, it really doesn't mean he or she's making a ton of money. It just means that they're winning a little bit, a lot of the time, and then you have a big loss that wipes out a lot of that profit. And this is the opposite. You lose small a lot of the time, but then every once in a while, you have a huge profit. And, look at the losses. Average loss on a trade, you stay in 7 days. Average winner, 211, right? But, I mean, could you imagine? Loss. I mean, it would get old, no doubt about it. Then you get a decent, but then you have a whole string of losses, and then you get decent, but then you get a monster. 78, a 22, a 25, a 36. It pays for a lot of these little gains, but I guess the main number is here. But whether or not it's something that works in your, with your personality is a whole other thing. It would be tough for me, but let's look at Merck in a different light, not just under the 250, over the 250, but we're down near a 30 RSI. We went under the third, over the third. So I would imagine that your winning percentage with an under the third, bounce at the 30, under the negative 30 ATR channel, over the 30 ATR channel, and a close above the 250 would be a better winning percentage than just any old under the 250, over the 250. Sampor says, thank you for looking at those, Greg. Where can I see you day trade? Oh, well, I showed some of my day trades earlier in this live stream. I'm not streaming them out live. I'm just trading before the podcast and then showing you the trades I've made when I start the podcast, because I don't want to be podcasting all hours of the day, so, if you go back, you can watch when I talked about Goldman Sachs and when I talked about the day trades that I took on Goldman Sachs and Apple today. Bob says, mine was a 10. My 10 was an EMA, so was confused. Yeah, that's right. Sometimes, let's take a look. I'll show you an example. The 1050 EMA is a very good across the board approach to trading all sorts of different stocks and securities. But, let's try these, right? So let's do 1050 on IWM, and let's do the simple, right? Because I use the simple. 1050 simple on IWM, back test here at 322 compared to 313. So let me just write that down. 322.4 compared to 313.8, and the drawdown is 21.7, and the drawdown on the buy and hold is 58.6. So, okay, that is the 1050 SMA. Let's change that to EMA and see what happens. Not so great, not as great, right? Still positive, but the win is 246.9 compared to 322.4. The drawdown is 23.4, and the drawdown there is 58.6. So it doesn't mean that a 1050 EMA wouldn't work. It does work. I mean, it does test positively. It's just that the 1050 SMA on this particular example tests better. And, why not? If you have something that backtests a little bit better, it gives you a little bit more of an edge, probably want to use that one. Not to say that simple moving average crossovers beat exponential moving average crossovers. Jackson just did a bunch of testing, and in his work, he's shown that the EMAs generally beat the SMAs, and I believe that 100%. But on IWM, for example, it doesn't. Jackson says, "Hey Greg, just to confirm for us Australians, we don't need to come back until Wednesday a.m. for podcast." That's true. It's like a summer vacation. Yeah. That is true. It would be Wednesday. Okie doke. Well, if anybody has any other questions, please let me know. I'll do my best, the best I can to answer them. Jackson says, "Gonna miss you." Miss you too, buddy. Miss you as well. All right. Okay, Evan has two new positions. IRBT. Did anybody get out of anything today that I don't have up here? All right, so let's put in here IRBT. I'm just basically going to put up here right about the close, assume that's where y'all bought it. And that's Evan. And Gamer. Okay. And Facebook. And W. What is W? Aha. Okay. Okay, got those. Jackson says, all my orders are already in for next day. I just walk away, but do check that I entered correctly. But I don't like to leave it already done. Sweet. Nice, Jackson. Gamer said, okay, I got you down for IRBT and Facebook. Claudia says, thank you, Greg, for all you do for us. Have a great weekend. You are certainly welcome, Claudia. Hope you have a nice weekend. And, spend some time, think about, some mechanical approaches to getting out, phasing out, a definite plan and sticking to that plan on the upside. You're working on, you've done great to the downside from what you said, but we have to let those winners run as well. Maybe take a little off, a little here, a little there. That might kind of quench your thirst for wanting to take a little off, but still leaving some on. Hope you have a nice weekend, Claudia. Kamal says, Greg, could you explain the lower high washout and low like on Beyond Meat? I don't quite get it. Yes, I will. Yeah, I saw that, Evan. I was thinking, and I thought that's exactly what happened to you, that it closed under 30 right there. On the 3rd of February was low, but it hasn't gone past then. He washed out. Okay, yeah, I will definitely get to that, Kamal. Jackson says, go past down 102.43 and then show some strength closing above that level in the value. Correct me if I'm wrong. Which one are we talking about here? Are we talking about Beyond Meat? Bob got into IRBT. All right, we got a lot of action on IRBT today. Okay, so let's look at Beyond Meat. Okay, so when you're above the 1 ATR channel, Kamal, obviously we don't want to buy here. We want to wait till it comes back into the value zone. But once it comes back into the value zone without sideways movement, I'm not going to take it without sideways movement. And a lot of the times, if you don't have sideways movement, but you have a V2, here's a V2, right? We came straight down, straight back up. When that happens, generally that first rally will fail, just like it did here. Do you see how this high, we came into the value zone, then we rallied, but do you see how this high now is lower than that previous high, right? Obviously, right? This high is lower than this high. So if you come into the value zone and it moves up and then it fails, now you have a lower high. When that happens, the way I was taught by Kerry Lavorne, if I have a lower high, I am not going to take a V2 with a lower high above me. This is a lower high than here. The V2 happened with the lower high above me. Kerry taught me to wait. When you have a lower high, I cannot get involved in another V1 or a V2 down here, ideally, unless the price comes back down, tests this low, and this low holds. Because a lot of people, when you have a lower high, a lot of stops in here, sell stops at that pivot point, so that essentially, if you have a lower high, it's a very high likelihood that you're going to come back down and test this low. And if you test it and it survives, then fine, you can get back in. And we definitely can talk about that more on Monday night, Kamal. But that's basically it. I mean, if we look, let's see if we can find some other lower highs. Well, here we go. Here we have a high, come down. See how we have a lower high? That's why I didn't take this V1. I would need it to wait to wash out here. Very likely it would. Listen, before you go, if you could be so nice and hit the thumbs up button, I would really appreciate that. It really does help build the channel, helps get more people to the channel, promotes the channel. A lot of people out there need help. So take your little mouse, put it right down there in the little thumbs up button and hit it. Or if you didn't like it, you hit the thumbs down button, right? One of the two. But I appreciate it if you did find today's podcast helpful, if you could hit the thumbs up button. And, today and every day, please go out, try to do something nice for somebody, right? Just a smile or a wave or a hello, just something really could make a huge difference in their day. So go out and do something nice for somebody. And if you like today's podcast, if you like the live stream, whatever we want to call it, please go ahead and hit the thumbs up button before you head out of here. Okay, come on, cool, got it, thanks. And we'll talk more about that on our next lesson. Oh, I forgot to put in my plug. Listen, everybody, I teach lessons, right? And so if you're interested, please let me know. I teach one-on-one lessons. I do offer a course, 5 sessions. Each session is between 2 and 3 hours. It's one-on-one in the evening time via Skype. If you're interested, reach out to me. You can send me an email. It's in the description of this video, or you can send me a message on Twitter. And, if you're interested, I like to do kind of a, it's a free Skype call, just to get to know each other, just to see if we're a good fit. And it's free and there's no obligation, I promise you. So if that's of interest to you, please let me know. Just send me an email and we'll get it set up. Kamal says, I will look out for the washout. Okay, good. Greg, enjoy your holiday, President's Day, but either way, enjoy. Thanks, buddy. I appreciate it, Jackson. Thanks, Joe. Thanks everyone coming. I appreciate it. Evan says, what am I going to do on Monday now? Well, you know what? You can also always do chart study, Evan, right? You can always do chart study on your charts. Go through, look for these patterns, and do some simulation. Or read a good book, read Steve Burns, Moving Averages 101. That's what I suggest or listen to it. All right, everybody. Thank you so much. Great to see you. Have a nice Valentine's Day. Have a nice weekend. Be safe. Study up a little bit. And we'll see you back on Tuesday. So enjoy the long weekend. All right. Take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.